So today, I will share with you 8 key traits, 8 key characteristics that show a stock is a real winner and a potential multi-bagger. Now get ready, get some popcorn, because what you're about to learn here today might help you make a ton of cash in the stock market. Now, in case you don't know me, my name is Victor and I run Capital Edge Research. If you want to find great stocks before they become headlines, check it out. And with that said, let's begin. So the first thing I look for when I'm researching a stock, when I'm studying a company that might be a potential investment, is the problem it addresses. You see, there's a very important thing people usually don't understand. People just think about problems as problems. But you know, problems are also huge opportunities. After all, people want to solve their problems, right? And for that, they're willing to pay you. If you don't solve anybody's problem, you probably won't make any money. Think about Amazon, for instance. Buying used to be a hassle. Driving, waiting, limited choices, right? But Amazon solved that by making shopping faster, easier, and cheaper. Huge problem, huge market, huge company. Big problems hide big opportunities. Or think about Lockheed Martin, right? Does your country need top-notch defense systems, advanced weapons? Well, Lockheed Martin might solve your problem. On the other hand, think about Pop Mart International Group, a company that produces dolls like this one. And you see, even though Pop Mart International is a multi-billion-dollar market cap company, I wouldn't put my money there. Oh, but its founder just became one of the 10 richest persons in China. I don't care. Pop Mart International might sell fun dolls, and people might enjoy them, but these dolls aren't something people really need, you know? They are nice to have, but they are far from being essential. And I want to invest in a company whose products solve an urgent need that address a real, painful problem. I want a company that solves issues people have to fix. I'm interested in lasting value, not just trends or temporary hypes. So that's the first trait, the first characteristic of a potential great stock. The company behind it solves a relevant problem people are willing to pay to fix. And I'm looking for businesses that solve problems at scale, which means a huge addressable market. Now, speaking of scale, that's actually the second thing I look for in a potential investment. The business must be highly scalable. That's why I love software companies and digital businesses so much, because they scale incredibly well. But take my website, Capital Edge Research, for example. Yes, it's true that setting it up took a lot of work, and that doing all the research to pick the stocks I will cover there takes forever. But here's the thing, whether I have one client or 50, the work is pretty much the same. That is scalability. And if your business is scalable, it becomes much easier to grow, and it will be more profitable too. So definitely, scalability is something I'm always looking for. Now, I brought my business, my website, as an example. On the other hand, let's now think about a barbershop. How scalable is a barbershop? Well, not much at all, right? For instance, let's say you have 10 clients a day. And let's say also that you are the only one working there. Now, if you want to serve 30 clients, you will need to hire more people, right? And if you want to serve 100 clients a day, chances are you won't even fit them all in the same space, which means you will need to rent another shop, hire even more staff. So it's a much more costly business, you know. It's not that easy to grow. So that's the second trait. That's the second characteristic I'm after when I'm searching for companies to possibly invest in. Now, the third characteristic I look for is a moat. What's the company's moat? What makes it different? What defends it from competition? Because you see, you might have a super scalable and profitable digital business, but if it's easy for others to copy, it won't last very long, right? Take my website, for example, again. It doesn't have a strong moat, right? Actually, it doesn't have any moat at all. Anyone can decide to do something similar, and nothing will stop them from it. On the other hand, let's think about Ambev, a huge Brazilian beverage company. If I'm not mistaken, it is one of the largest beer producers in the world. They have huge factories and massive infrastructure in Brazil, and their brands are also known by basically every Brazilian. Now, do you think that's easy to copy? Of course not, right? So yeah, Ambev definitely has a very strong moat. Or think about a pharmaceutical company that makes a drug protected by a patent. A patent is a very strong moat. It means that others cannot copy your idea. That blocks, or at least makes it really hard for new competitors to enter the market. So that's the third characteristic I look for in a company. What makes it different from the rest, and how hard it is for competition to enter the market and crash that company's party. So, a strong moat is the third characteristic I'm always looking for. Now, before we start talking about our trait number 4, if you are enjoying this video, don't forget to leave your like, okay? Come on, it just takes one click. And I also invite you to subscribe. Thanks! Now, the fourth characteristic I look for in a company that might be a potential investment is skin in the game. In other words, how much of the company do insiders actually own? Is the CEO heavily invested? Does he own a good chunk of the company? Was he the founder? What does that company mean to him beyond just capital, beyond just money? You see, I want the management team to have real skin in the game. I don't want directors who are just there waiting for their next paycheck. I want people who are truly motivated for the business to succeed. That's why I'm always looking for companies with high insider ownership. I don't always end up picking companies like that, but that's definitely where I start. Now, the fifth characteristic I believe a great company, a great stock must have is the network effect. Now, what's the network effect? Think about Instagram. Now, imagine if very few people used Instagram. Would you use it? Probably not, right? After all, you want to join a social network where most of your friends are too. Now, I remember very well when I first created an Instagram account, and I did it because, well, everyone already had one. Since I wanted to be part of what everyone was already part of, I decided to create my account. And that's exactly what the network effect is. In other words, the more people use a product, the more people want to use it too. This way, the network effect creates a virtuous cycle of growth. That's why companies that benefit from the network effect tend to grow much faster and more easily. Besides, the network effect also creates a moat, since once these companies reach a certain scale, it becomes incredibly hard for competitors to catch up. Now, not every business benefits from that, okay? For example, a laundromat doesn't count with the network effect. So, that was trait number 5. Now, if you want to learn about a stock with a massive network effect, I suggest you sign up for Capital Edge Research, and I will leave a 40% discount coupon down below. So now it's time for us to talk about trait number 6, which is stickiness. Stickiness is about how hard it is to give up a company's product. Let's think about Google, for example. Google is a very sticky company. For example, it would be very hard for me to give up Gmail, because I have years and years of emails there. Through Google, with my Gmail, I also have Google Drive, Sheets, and Docs. Besides, I have several accounts linked to my Gmail as well. So it would definitely not be easy to give up Google's products. On the other hand, think about a barbershop. It's much easier for me to simply go to a different barbershop, you know? So that's why this business is not very sticky. Now again, if you want to learn about a very sticky business, check out Capital Edge Research. There's a real gem in my members area. Now, the 7th characteristic of a company that might be a great stock to invest in is recurring revenue. That's crucial. You see, I really love businesses with recurring revenue because it means that they don't need to start from scratch every single time. For example, let's say you have a company that organizes parties. Now, let's say you've got 3 parties, 3 events booked this month, but your calendar for next month is completely empty. Now, that means that once those projects are done, you will have to start all over again, looking for new clients and new projects, which will also end soon. So in a way, if your business doesn't have recurring revenue, that means that you are constantly chasing your own tail, right? Now, let's think about Vimeo. In case you don't know Vimeo, it is a platform where you can upload and share videos in a private, customized way. It is different from YouTube because on Vimeo, you can control exactly where your videos are seen. For instance, I use it a lot to upload videos for my members only area. If I used YouTube instead, anyone would be able to share my videos with whoever they wanted. And the way Vimeo works is through a monthly fee, a monthly payment. So unlike the party planning company, Vimeo knows it will have revenue coming in next month. So it doesn't need to constantly chase new clients to survive, you know, because its clients are still there, using their service month after month. And that's a huge advantage, right? And because of that, Vimeo can simply focus on adding new customers to its base, growing steadily this way. That's why businesses with recurring revenue tend to be more predictable and more stable. And because of that stability and predictability, companies with recurring revenue usually trade at higher multiples because the market sees these businesses as higher quality. And of course, I always prefer companies with recurring revenue, right? And that was our characteristic number 7. Now finally, we've arrived at the last essential trait, at the last essential characteristic a stock must have to make a great investment. You see, it doesn't matter if a company has all the amazing characteristics I've talked about if it's not undervalued. If it's not undervalued, it's probably not going to be a good investment. A company can be fantastic, ticking all the boxes, but if it's overpriced, it probably won't deliver good returns. A great example of this is Palantir. Palantir is an excellent company, no doubt, but it is trading at 100 times revenue, just like I mentioned in this video here, where I explain why Palantir investors are likely to lose money. And the reason is simple, because the stock is simply too expensive. So that's our final trait. To make a great investment, a stock must be undervalued. There is no point in buying an amazing company at sky-high prices. Honestly, in my opinion, it's actually better to buy an average company at a cheap price. Like I said before, investing is not really about buying excellent companies, but rather about buying undervalued ones. Anyway, I hope you enjoyed this video. That's it for today, and see you next time.